Welcome back, Akahilz. We're looking at how to use Uniswap. So apparently, this article should be beneficial or informative for individuals who do not know how to utilize Uniswap. Live on how to guides on CoinMarketCap blog. So it says here, these are table of contents we'll be covering. So feel free to click on the red subscribe button beneath this video and also turn on notifications so you get notified whenever we drop beneficial updates. It says among the sea of DeFi projects out there, one of the biggest names is Uniswap. Over the summer of 2020, this decentralized exchange protocol caught the imagination of crypto enthusiasts, and at times it's been a market leader in the industry in terms of dominance. As of August 2021, Uniswap is the largest DeFi token in terms of market capitalization, according to CoinMarketCap's DeFi tracker. But how does the Uniswap exchange work? What's the ideal with its the deal with its governance token and how to use it? A thorough guide will explain everything. So basically, looking at how Uniswap protocol, it says does things differently to centralized exchanges. Its open source software has been built on the Ethereum blockchain and allows users to trade ERC20 tokens without the need for a middleman. So as well as helping to reduce fees, this can iron out some thorny issues concerning censorship and more. The liquidity providers play a big part in making everything happen without the need for an open order book, so anyone can get involved in these liquidity pools as long as they contribute the equivalent value of two tokens, such as ETH and stablecoins such as USDT or DAI. In exchange, they will get liquidity pool tokens that can then be used on other decentralized apps. So this also ensures that they can get their contribution back at any time. The users pay transaction fees whenever they complete a swap using a trading pair, and a portion of this goes to the liquidity provider based on how many pools tokens they own. So we have Uniswap pools rely on an equation that is known as X times Y equals to K. So here X may represent ETH, Y may represent USDT, and K represents what happens when you multiply both values to discover the pool's total liquidity. A constant production, product market makers, the smart contracts that hold liquidity pools work on the basis that K must remain constant at all times. So let's imagine that someone uses a liquidity pool to buy ETH in exchange for USDT. This transaction would ultimately mean there is now less ETH in the liquidity pool and more USDT. If someone who purchases ETH in exchange for USDT from a liquidity pool will ultimately affect the balance between the two assets in this trade pair, increasing the price of ETH and decreasing the price of USDT. This slippage is generally less pronounced in larger liquidity pools. Some of the main advantages of Uniswap include that it is far less complicated to use than other decentralized exchanges, and it means buyers and sellers are no longer responsible for creating liquidity. So when did the Uniswap launch and what is Uniswap? So we're going to be looking at uniswap.org, launched back in November 2018, and its inventor Aiden Adams said it was inspired by a post that the Ethereum co-founder Vitalik Buterin had written about automated market makers. So one of the biggest developments for this DeFi project came with the launch of Uniswap version 2 in May 2020, which meant that ETH no longer needed to be one of the two assets in the liquidity pool. As of August 2021, there is a total value locked TVL of $4.96 billion on version 2, according to information in Uniswap Analytics here. So you want to check that out for more information or more update on the latest figures. As a result, the token swapping can now take place directly between ERC20 tokens, reducing the overall number of transactions and the gas fees associated with them. That's good news for the Ethereum blockchain, which has been struggling with congestion brought about by decentralized finance boom. Other new features in version 2 included on-chain price fees that are highly decentralized and difficult to manipulate. Technical improvements that mean smart contracts are now written in a Solidity language. We have flash swaps, which allow someone to withdraw an ERC20 token and use it for capital-free arbitrage or instant leverage. So what are Uni Tokens? In mid-September 2020, Uniswap announced it was creating a brand new cryptocurrency called Uni. This designed to serve as a governance token which gives users, owners, a say in the future of the protocol. At launch, every single person who had used Uniswap was awarded with 400 UNI tokens at one point following launch. So this airdrop would have been worth over $3,350. A total of 1 billion UNI were minted at the genesis, 15% of which were allocated to past and present users. Meanwhile, 40% has been split among employees, investors, and advisors. It is believed that the token launch was in response to SushiSwap's decision to migrate $1 billion of funds away from Uniswap to its DEX platform in what was described as the time as a vampire mining attack. So, guys, there's lots of these articles. So, looking at what the Uniswap version 3, the Uniswap v3 was launched on layer 1 Ethereum mainnet, was followed shortly by layer 2 deployment on Optimism. As of August 2021, there is $2.34 billion dollars TVL on version 3 according to analytics. Yeah. So we're going to be looking at what makes the Uniswap v3 exchange different. The Uniswap V3 introduces two main features: concentrated liquidity and various fee tiers. The concentrated liquidity allows liquidity providers to determine what price range their capital is allocated to. So these will be aggregated to a single pool and form a combined call for traders to trade against. So from that, the multiple fee multiplier tiers compensate liquidity providers in accordance to the risks they take. So the benefits of these features are higher capital efficiency and greater returns, low slippage, trade execution, and greater flexibility or liquidity providers. So relative to Uniswap version 2, liquidity providers can provide liquidity with capital efficiency is up to 4,000%, hence improving the returns in turn. This also results in low slippage, trade execution, and exceeds centralized exchanges and stablecoin-based AMMs. So furthermore, liquidity providers can choose to increase their exposure to preferred assets while reducing the downside risk. They can also sell one asset for another by pricing above or below the market price, estimating a fee earning limit order that executes along a smooth curve. Furthermore, Uniswap oracles are cheaper and easier to integrate. Time-weighted average prices can be provided on demand for any period within the last 9 days. So protocols using these oracles do not need to record historical values. Even with these powerful features in place, gas fees on V3 are also expected to decrease slightly compared to V2. On the L2 optimism chain, the gas fees are expected to decrease significantly. Looking at a step-by-step guide to using Uniswap. So basically, it's a straightforward guide. You need to go over to the Uniswap app. Once you go over to the Uniswap app, you need to connect your Ethereum wallet, such as MetaMask or whichever wallet you want to utilize in this procedure. Select the token you would like to convert in a drop-down menu and the cryptocurrency you like to swap it for. After clicking swap, preview the transaction in a pop-up window and then confirm the request directly from your wallet. So next, you will have to wait a little while the transaction will be finalized on the Ethereum blockchain. And remember that you can keep track of how this is progressing through the etherscan.io blockchain explorer. So you want to take note of your wallet address that is being utilized in this transaction and keep track of this process. So this is basically a five-step procedure that you want to take note of. So that you might also be utilizing slippages. I said the challenges facing Uniswap. So the decentralized finance industry is a competitive one, to say the least. This means that Uniswap could be popular one week, only for another DeFi protocol to steal the limelight for the next. As we alluded to a little earlier, Ethereum is also buckling under the strain of the congestion caused by DeFi projects with gas prices going through the roof. Of all of this means that the industry could end up exploring other blockchains undermining Uniswap unless Ethereum 2.0 is implemented quickly. Some also argue that Uniswap's reliance on arbitrage trading means that the platform will forever be dependent on centralized exchanges such as Binance and Coinbase. That said, it seems like Uniswap has no intention of sitting still, and an upgrade to V3 is currently in the works. Founder Aiden Adams has claimed that this new version will eat Uniswap V2's launch and offer a far better experience. it is this innovation that could help the DeFi protocol stay one step ahead of its competitors. So, guys, I hope you find this beneficial. I hope you understand these whole concepts of utilizing the Uniswap in general, and also the origination or the overview of what the Uniswap entails. Feel free to drop your comments in the comment section. Let us know if you have any questions. We'll also try as much as possible to assist you in the best possible, in the quickest way we can. Also, click on the like, share, subscribe button so you get notified whenever we drop updates. It's your bye, keys. Peace out and stay tuned for more, guys.